Questions? Wow, I put them all to sleep.
Do you know what's going on with Tezos right now and their foundation?
Just a little bit. I actually wrote an article about this about 6 months ago, predicting exactly what's happening now. Well, they never expected to raise that much money, right? So if you introduce that much money into a friendship, it becomes a different story. So that's my personal take on it. There's no inside story here. This is just what I expected to see when this amount of money is changing hand. And I'm telling you, hey, hold on to my $100 million. Oops, it's 500 million. I'm going to change my mind.
What do you expect the resolution to be? Or do you predict it?
Well, the gentleman was asking what I expect the resolution to be. Well, so it's a Swiss foundation, right, in Zug. Oh, the Tezos quarrel. So Tezos is a foundation in the little town of Zug, very picturesque, very empty. But the Swiss foundation law is somewhat different than here. So yeah, you should have corporate governance and it should look a particular way. I honestly don't have a ton of insight, other than Swiss foundations are not the same as here. Swiss foundations actually can make money. So it's a little bit different story too. And I really can't give you an answer to your question other than that. Okay, we're doing the row thing, starting here. Hey.
So how do you think blockchain is going to affect other forms of media, especially thinking like social media?
Social media, okay. Oh, that's actually my favorite topic, very good. So the lady was asking, how is blockchain going to affect social media? So there's a lot of projects on the way right now that are trying to challenge the position specifically of the obvious one, which is Facebook, that owns all of your data per their user terms, right? So whatever you put in there, they own it, they use it, they market it. 100 hours of you on Facebook translated to $1.35 in advertising. So a lot of teams are trying to address that by giving you the rights to that data back. So trying to make other people pay for your data. So having access rights to only your data if you either allow it and or decide, hey, yeah, you can access my data, but only in this particular way and only if you pay me. So there's dozens of projects underway right now. So, and I hope one of them will stick. Let's go to the further rows here.
Hi, I had dinner last night with David Moss from EOS, and he was telling me about how they're looking to host apps and scale, similar, I guess, to Ethereum being the infrastructure. So my question to you is, it seems that there's a lot of platforms being developed. What's your thought about assuming, let's say, that we're in the relative infancy of all of this, let's say towards the mid-90s of the internet equivalent? Yep. What's your thought about the competitiveness and the ability for these different platforms to survive without really seeing failure and having a dramatic effect on the overall growth of the market?
Right, yeah, and to add to that is a really, really good question. Yeah, and I agree, by the way, we're in the mid-90s, right? We haven't even reached dial-up stage. What I used to say, it's more like, does anybody know what an acoustic coupler was? It's like a piece of hardware you put into a socket and then it transmits DTMF tones, and I forgot, it was like 12.4K or something ridiculous. Anyway, so, and also on the topic of EOS, they just announced a new fund, $350 million together with the guys from New York, Novograds, and so they're going to start funding certain projects that specifically support EOS. That being said, if you look back in history, it's not necessarily the for-profit entities that survive, and actually I have another slide that I forgot about that talks about that, but it's the for-purpose entities, right? So by all intents and purposes, if it was for-profit, then the internet should be run on Windows today, right? That didn't happen, right? Because there's many more people that were of the firm belief this should be open source, and it should be continuously evolving and not every Tuesday, right? which is what Windows does. So having said that, so I don't think necessarily that however much money any of those projects raised will necessarily determine the outcome, and in some cases it actually might be a hindrance, because you don't have to focus if you have $100 million in the bank, but if you're nearing the end of life because, hey, I gotta let 10 guys go if I don't make payroll, you tend to be more focused, and you tend to spend the weekend at the office developing new things that people actually use. And so this comes back to actually my real last slide, and I lost my trusty operator over there, but it speaks to, oh, you went away and you thought your job was done, huh? Okay. I hope I made it. I thought I made it. I did. Good. So this is actually my favorite topic. It's decentralized autonomous organization. So there was a lot of talk about the failure of the DAO, the DAO, and unfortunately it was taken as such, meaning that everybody is now projecting this failure on decentralized autonomous organizations where they just took the moniker. This was just one example, and actually, in essence, it was a good example in the sense that it failed and it proved the overall system, because after the failure of the DAO, what actually happened is it was rolled back for the most part. So 35 million or whatever it was in dollars, again, dollars don't really matter in the equation, were embezzled, were taken, were hacked, but then at the end of the day, it was all reset. Well, which is not possible if there was JP Morgan Chase or Bank of America or whoever. They wouldn't reset that. This $35 million would be gone. So what my point is here is decentralized autonomous organization have the large potential to disrupt any industry where we now have the dominance of a for-profit organization. Simple example. So right now, there's basically one dominating search engine called Google, right? So most people use it every day, but what is Google? Google is an advertising company, right? Google makes 90-some% of all of their money doing advertising. So are they really a search engine? If that's where their profit is coming from. Also, if I wanted to build a better search engine, well, if I make it 50% better, and the effect is that I make 50% less revenue, am I gonna do it? Probably not. So at the same time, if I have a for-purpose entity whose entire purpose it is to provide a better result, not the main purpose being to make more profit for my shareholders, do you think that entity has a better chance to develop a better search engine, to develop a better way to create energy, to develop a better way to distribute water, to develop a better way to do anything that you guys do digitally right now? At the end of the day, if you're looking at corporations that we created, they're internally at conflict. What I mean by that is, as a shareholder and someone who wants to make profit out of it, I don't care what the company is doing as long as I get my dividends. If I'm an employee, chances are I don't want to work as much but get paid the most. If I'm an operator, I have my own goals. So all of these goals are necessarily not aligned. With blockchain and the implementation of a decentralized autonomous organization, you actually have the option to align all of those interests. So if I'm the holder of that token, and every time I contribute to that system, my token becomes more valuable, I have a much higher incentive to do this particular thing, whatever that might be. Create energy, create a task, and you can already see the beginnings of those. So if you're looking back to the initial slide as far as like what you should be looking for as an investor, is like, okay, look at the companies that are for profit right now, and look at entities that are building something on the blockchain that just have a purpose that is directly aimed at this particular entity. There's a lot of value to be gained, and that's at the end of the day where the real utility is coming from. Yeah.
Well, even for purpose projects still need backing, and that backing will come from people looking for profit. Right?
Yes.
So at the end of the day, it still comes down to people looking for profit, right?
Yes and no. At that point in time, I always like to use my Coronado Bridge example. So when I first moved here in 2000, I loved riding over the Coronado Bridge, and at the end, you drive from downtown to San Diego to this little island. And when I first moved here, I had to pay $1.50. There was a little toll booth. A couple of years later, the toll booth was removed. The reason for that was because private money built this bridge, and once that private money made a certain amount of return, the bridge was turned over to the community. Yes, in this particular case, yeah, you'll see a little bit of a flaw in there. The bridge needs to be maintained, right? But it doesn't cost as much as building the bridge in the first place. In this case, the bridge is probably maintained by the city of San Diego, I assume. But you can assume that if I build internet, right, at one point in time, this infrastructure could be paid for, right? Right now, I don't know what the aggregate numbers that we all here in the room paying to whatever, Verizon, Comcast, etc. I'm making the assumption this network has been paid for. Yeah, and at this point in time, should be free to anybody. All the way in the back, he has been waving his hand the entire time, so I'm gonna walk over there now. No, in the microphone.
What specific actionable advice do you have in investing in blockchain and cryptocurrency?
So just to repeat, what advice do I have for investing? So for me personally, it comes back to I like to look for the particular purpose. As long as I'm excited about that and I liquidate some of my other funds to put it in this, it doesn't matter to me if I lose those funds, because again, I'm kind of voting with my money, right? So that would be, for me personally, rule number one, because yeah, okay, we tried something, it had a valuable goal, it was not just for me to make money back, because at the end of the day, money is always a placeholder, right? So money by itself typically doesn't have any value. It's always what the money can give you. So if you see something else there, that's what you should be looking for. But then again, so if you're just looking at it back to the money perspective, and I assume a lot of people in the room are absolutely still motivated by that, there's nothing wrong with that inherently. Stick to just the main purpose engines that are out there, which are the protocol layers. If you go back and analyze the 10 top ICOs of last year that got most of the contributions and that also got a lot of traditional money, those are protocol layers. Those are Ethereum, they're Bancor, they're Teasers. They are things that actually build new infrastructure on which then other systems will run, right? And so it comes back to, obviously, you don't want to put all your money in one basket, you want to diversify. And obviously, at this point in time, again, everything is alpha at best. There's really no good working system outside of some of the private blockchains. And again, it's even questionable if you can call a blockchain if it's maintained by one large organization, because it's really not distributed and decentralized. It's really centralized in one way. So I would argue, well, yeah, you can call that blockchain, but it's really not, right? It's not open source. It's not constantly developing. There's no true community behind it. There's commercial interest behind it. It's by definition limited to whatever capital you put in there, because at one point in time you could run out of it. So I'd stick to those projects. Anand, yes.
How and when do you think blockchain will affect payment processors and payment processing companies on a little bit more than a small scale?
Right. Honestly, it does already, but just not here. It goes back to the early example that, hey, my HUD in sub-Saharan Africa never needed a phone and doesn't need a phone now, and now I don't need the bank either. And the best example that you have for that is M-Pesa. Most people probably know that, where people just started trading prepaid minutes, and then the phone company decided, hey, that's an awesome business model. We should just allow people to trade minutes, makes for a much better currency. I can just load my phone up with these minutes and send it to someone else. So this is happening more visibly in other nations that don't have the infrastructure that we have, because obviously here, all the banks and financial institutions will fight this with their dying breath, right? And also every government action, every action from any SEC or any of the other agencies is not motivated by consumers, right? Consumers don't have an office on K Street, right? They don't have lobbyists lobbying Congress to intervene in any of those shady ICOs where consumers get hurt, right? That is really not the case. I mean, that's rhetoric. That's why you need to be very, very careful what you read in the public media.
Ours does. It's called ulala.io, and we do it in the United States. And we are about to open our ICO in March, but we're doing our private raise now.
That's a remittance play?
Where? Yeah.
Yeah, so that's kind of the best example. So remittances, right? So people in this country with relatives in other countries, there's 150,000 Western Union stations around the world. And so typically, if someone walks in there, undocumented worker here, deposits some cash, they have to pay an enormous fee, and it takes forever for the relatives to get that money. All of these people need to go away because they are preying on the weakest in our society.
That's exactly what we do.
Any thoughts on any like energy management type issues with things like Bitcoin going forward?
You're referring to proof of work, I assume?
Yes.
Yeah. I mean, there have been many other proofs being discussed. I mean, specifically, as you already know, so proof of work, to repeat, is the idea I need to spend a lot of energy to win the creation of a block and make that bonus, that money coming from the creation, and that's the justification to believe, hey, that this system won't be gamed. So that's the reason for that. So there's other systems being discussed that will eventually, in my expectation, win out. Proof of stake, proof of delegated stake, proof of whatever is justifiable for this particular blockchain. There's proof of authority. You will see many, many more different proofs that are sensible that pertain to real world environments. I've seen applications where it's like proof of authority. Someone who is a notary right now can verify themselves as a notary through the blockchain and then do the same thing. But guess what? Now it's a digital ledger. It's not one of those comic books where you put in your thumbprint that only you have on file, right? So it has much greater utility. And why should these people not transition to the blockchain? It makes only sense, right?
What's your thought on liquidity? So the reason why I asked that is I tried to buy Ripple
Right.
and could not get my account on Bittrex done. They had all sorts of issues, and
Right.
once it seemed once they got on all the exchanges, it exploded. So
Yeah.
I'm interested. I've invested in other things like Electronium, which has a market cap of about 700 million, but they're traded on just one exchange.
Right.
So, you know, once that goes to multiple exchanges, like, what are your thoughts about how liquidity is affecting the different currencies?
Okay, there's multiple themes here that I actually do multiple talks on. So one is the exchanges, right? The exchanges are something actually very unnatural to blockchain because they are centralized, right? They're the opposite of what blockchain is about. I don't expect exchanges to survive in the long run. What I expect is that you have a wallet that picks up a heartbeat of every currency and you can trade with anybody in the world. Just like you can pick up Skype and you can call anybody in the world whose address you have in your phone book and that's willing to accept your phone call, right? And as far as liquidity, as you probably know, there's a lot of hodlers out there. For anybody not familiar with the term, those are the people that buy cryptocurrency and specifically here Bitcoin and then sit on it. It was initially a typo in a news group. Someone was saying just hold, and then mistyped it and became a theme. That's why you're seeing those t-shirts that now say hodl. So these are the hodlers. There's a large contingency out there that will just buy cryptocurrency and just keep it in their ledger in some hard cold storage wallet on their desk and just keep adding to it week by week. So that's part of the issue. And there, as far as the exchanges are concerned, specifically obviously in the United States, because of the regulation that the government put or didn't put out. You know about New York State putting out their specific regulations, so some of the exchanges actually adhere to that, but it puts other scrutinies on them. So you have to identify yourself. Like if one of the identification checks doesn't work, you can send them a letter. But again, Coinbase, as an example, is signing up 150,000 new users a day, right? They cannot hire enough people to check in on that. Like they take 10 days to respond to a simple question, much less to a trading request, etc. So there will be solutions, but also think about it this way, which is, I think, very, very important to understand. If you're in the room here, you're one of the very few early adopters. As of the last statistics that I saw, there's less than 20 million digital wallets out there. There is, 3 billion internet users right now? Every single person should have a digital wallet at this point in time, but they don't. So once this happens, yes, there will be more liquidity. People want to actually buy stuff. And the other thing is, right now, I mean, you can't buy a whole lot with it, and the transaction costs are really high because of all the other things happening on the blockchain at the same time, right? So you can buy something on Expedia in theory, but it's really going through Coinbase, and Coinbase is actually not an exchange, which most people don't know. It's a bank, so you're actually initiating ACH when you're starting a transaction there. So you can also exchange, for example, against Amazon gift cards, which used to be my favorite game of all time for like a year. I would always trade my winnings against gift cards, and everything I got from Amazon was free until I couldn't stand the stuff anymore. But yeah, you will see more liquidity as soon as you got more adoption, because if there's 20 million wallets, what you really have is about 10 million people using, right? And a lot of those are the early users. So those are the miners, those are people sitting on extra money, found money, buying crypto early and now divesting it into other cryptocurrencies, but other than that, not doing much with it, right?
Do you think it'll level price out?
Will it level price?
Do you think prices level?
No, I think, well, obviously, I mean, the answer is always it depends on what blockchain you're looking at. Overall, the top are all still way undervalued. Now is the time to buy Bitcoin, right? It's super cheap, really, if you think about this. As most people in the room should know and will know by now, there's 20 million that will ever be mined. It's a limited supply, and at this point in time, the number of stakeholders that have invested in this protocol is staggering, and the amounts of money that have been spent to build infrastructure around that protocol are staggering. It's not gonna go away. You'll more likely see the dollar go away than Bitcoin go away at this point in time.
But if your theory is that you'll be able to trade any currency for any other currency, that's my question.
Yes, because your wallet will.
Demand for Bitcoin would be less because you can just trade directly.
That's correct, and that comes back to the fact that essentially, if there's no other utility than it's acting as a currency, what's the benefit of one over the other? There isn't one. And plus, every wallet, or most, I think all wallets right now, are mini exchanges in the sense of you can already exchange fiat to Bitcoin and Ether in your wallet. There's no one else required. You do it right there. You can do it, we can do it amongst each other right now, right?
What are some of your favorite early blockchain projects?
Some of my early favorite blockchain projects. Well,
Early stage right now.
they're in early stage right now. Well, obviously it's the obvious one. It's Bitcoin, it's Ethereum. ES to some extent, they still have to prove themselves to some extent. But again, it's all alpha, and I don't really have favorites in that sense. But what I mean by that is I really look at the true utility of it. At the end of the day, what you call it doesn't really matter. You want to look what's the goal of doing this particular protocol. Look at it as a protocol. Look at it as a language. I mean, every money, so to speak, if it's the US dollar, if it's the yen, it's really the currency the language of trade, right? And it's limited to whatever, the nation state in this particular case. Well, the new paradigm that cryptocurrencies or really digital assets introduces, it's like, hey, this is specific for a purpose. It's not specific to a nation state. It's specific for the idea of we want to trade advertising, we want to trade energy, etc., right? So, and if it carries the kernel of decentralization in it, then you're probably looking at a winner. What I mean by that is if I can use that particular token to then decentralize how energy is being created and distributed, i.e., hey, it's much easier for me to run my solar panel where the sun shines and I create more energy than where it's not, then I can create a scenario where I send this energy to somewhere where the sun never shines, right? Where we have all renewable energy. But it's specific to that language of trade, where you understand as there are some things in abundance over here that are in demand over there, right? And right now we are using middlemen for it. Wherever you see a middleman siphoning off a large amount of profit, banks, union, whatever, that's where blockchain will come in and say, we can do this with a smart contract. And we call that smart contract, we call token X. Because every ERC20 token is really just another smart contract. But it's a smart contract developed for a particular purpose in a particular environment. Does it make sense?
Yeah, but Bitcoin and Ethereum that are like, these are veterans right now. And among the crypto and blockchain. So what I'm trying to understand in your perspective, what are the ones that are about to do the ICO or some cool stuff that you know people you met.
Right.
Something new.
Honestly, so every waking hour I learn about a new project, honestly. And a lot of them are amazing. And do I have time to vet them all? No. I mean, at the end of the day, you should take your time to look at who's actually behind the project, who are the developers, do they have support? And that's what's making Ethereum so popular, because they have that community support right now. Because you'll need that, right? You need those developers. At the end of the day, it's not the amount of money that you pour in. Because think about it. How much money did Microsoft put into promoting their browser? How much market share do they have? Hardly any, right? Because you got an open source browser that does a better job, that you can take apart and make a better one with it right now, right? So it's about the enthusiasm that goes into it. It's not about the money that they are raising ever. I'm not going to do it.
So if a US company wants to enter the whole scene, let's say they have proprietary information that makes sense with blockchain technology and they want to use that as a way of raising more funds in front of their competition. So as far as going on a utility token versus a security, which one makes sense and what is the whole process? Like, is the private funding comes in first and then ICO white paper goes out? Kind of get a better sense of the whole process.
Yeah, that's a whole nother talk that I do, and that one slide that he skipped because everybody was falling asleep. It's okay. Leave it gone. So you asked specifically about the United States, right? So the United States, again, it comes back to the fact that there's no certainty to be had because we don't have regulation. And even if one of the regulators decided they put out regulation that doesn't solve any of the other issues, i.e. are you a money transmitter, i.e. is there a taxable event, i.e. are you needing surety bonds, for an example, which is a state issue. None of that has been even remotely been addressed. That's why, as you see now, those issues are been taken overseas, and there's a certain structure put around that to kind of safeguard the creation of new tokens, right? Because most of the recent ICOs that you have seen have not been done in the United States. If you want to go the route that you mentioned later, so you got two options. So you can just go traditional security, nothing wrong with this. People do it all the time, right? So you need to spend a significant amount of money on your auditing and your filings. You need to pay a lot of lawyers and accountants and whatnot. And eventually you can go out there and actually raise money and actually use that term, raise money. Then there's this limited option of doing Reg 5, right? Where you can raise a little bit of money and brings the advantages with it that you can actually promote it. Because in that other scenario, you can actually not say anything about what you're doing. As most people know, that's a public company issue. You go into your quiet period, and the time you should be making the most noise, you're not making any. And the time to make noise in the space is right now. So you're very limited if you're doing the regulated route. It's $5 to $20 million, and again, it still doesn't relieve you from doing certain filings, so it will still cost you quite a bit of money. So companies that are going this route right now, so they will first raise some traditional money, and then if you raise traditional money, you typically have some form of prototype, right? So you have something to show for, you have revenues, you have users, you have something else to raise this money. We have to actually do an equity sale of sorts, because most of those ICOs, obviously they weren't equity sales. Those people maintained every single share in their company and just pre-sold, quote unquote, the utility on their network. The gentleman in the back, guys in the front need to be more active. In the microphone.
Are you available to do any of your other talks now? I was planning to be here till like 9, so. I'm sure you got a lot of other great things to say.
Well, some of them are actually on YouTube, but no, it's okay. So yes, not quite right now. I do an entire thing just on exchanges of how many there are, how they work, what is an exchange, what is a bookmaker, etc. No, I do an entire thing just on the law stuff. Yeah, those are all in our talk and in our Q&A, really. And at the end of the day, it always, like for any particular person in the room who wants to do a project in this space, it always comes back down to, okay, what do you actually want to achieve? Don't focus on cryptocurrencies, don't focus on tokens. First and foremost, focus on the end goal that you're trying to achieve, and then see if the token actually makes sense, and or if there's something already out there that does facilitate what you're trying to do, just use it, right? Just start using it, because again, this is all alpha, right? There's very few platforms that have significant actually users on the platform outside of Ethereum, and that's actually mostly just the ICO part, the tokenization part, and there's thousands of tokens out there right now. It's probably more than we'll ever need, right? There's going to be a whole new definition of what a token is. There's already crypto kitties, right? Unique tokens, where every digital asset is unique in its own shape and form, and this is the only one that will ever be created. Right? Look for those developments and then see whether or not what you're trying to do will fit into this paradigm, because there's very few blockchain developers to be had right now, and they all just do their own language right now.
Do you have any thoughts on Steemit, the alternative social media, digital currency? There's a lot of people predicting that it's going to be the next big...
Steemit, yeah. No, yeah, it's a good use case. I haven't seen a ton of quality content coming out of there. I think everybody should give it a try, create a Steemit account and earn a couple of their tokens, etc. There was a good team behind it, partially moved on to EOS, I believe. But other than that, it's a good test case. Will it survive? Not sure. Again, it will come down to the fact, are people building quality content on top of it, which I haven't seen much, but then again, I have a lot to do.
Can you talk about how to think about asset allocation?
Okay. Asset allocation, okay, yeah. So traditionally, or specific to the blockchain, I believe. Okay, so if you look at it in the big scheme of things, you got basically 3 buckets, right? So you got on one end the ICOs, right? So you're looking at new teams entering the markets, right? Then you got the coins that are probably going to be around for some time, that have great market capitalization, that have high trading volumes. And then you got people that facilitate the entire ecosystem. So any mining system, right? That's supporting either one or typically multiple of those blockchains. So you want to have one out of each of these buckets. Does it make sense? This way you're already diversified. Should I sing now? No. What is it with the gentleman in the back? You just like to see me walk back here. You can talk really loud or you can talk in the microphone.
Are you saying that there are cryptocurrencies that are specific to mining systems? I didn't get the third category of what you just said.
No, there are mining farms that either pick a basket of cryptocurrencies and support those in their mining efforts, or they shift in between them.
How does that relate to diversification?
You can participate in those.
Oh, so just
Yes.
be a miner, run the farm.
Yes, well, you can directly invest into those, right?
Through coins?
Through coins, through a platform, yeah.
Like what platform? Like how would I do that? 'Cause I didn't know.
Just Google it, trust me. You'll find many. Yeah. I mean, as you know, you can mine using your browser right now, as an example, right? You can mine buying a rig, you can mine buying time.
Right, but you said I could invest in a mining company. How would I do that?
Yes, you'll just allocate to one of those mining farms with their own token. And that's all they do, mining.
So I would buy a token?
Yes, correct.
Okay. Do you have an example?
I don't want to promote any specific one, but just Google, make up your own mind on that one. And back to the front. No.
What's your thought about leaving your currency on the exchange with two-factor authentication versus putting it in a wallet?
I almost think you know the answer. No, I think if it's any significant amount, you never ever want to leave it on an exchange. If it's a fiduciary exchange, right? So if it's just a one-to-one exchange, there's no problem. But no, everybody in the room, you should have some form of cold storage. So if you have more than $10,000, $20,000 in cryptocurrency, you should keep a good portion of that offline. It should not touch the internet at any given point in time. You want to have a Trezor or something that's sitting on your desk. You want to have a copy of your private keys someplace where only you know that it is, right? Yeah, so no, definitely don't leave any larger amounts on any exchange. Not in the US, not internationally.
Talking about exchanges, is there a couple of exchanges that you like better for the audience? If you can say that.
Well, so there are right now 147 exchanges in the world. In the United States, I think it's 5 in total. Only about 20 in total of those 147 have significant volume. So what you want to be looking for is the trading volume. And then also not all exchanges are listing every single token, right? So you want to first check, okay, does this exchange support all the currencies that I'd like to invest into, that I want to see in my portfolio, which most will not. So I like to just work with the first top 10 in terms of their trading volume, and I think I have a post somewhere that lists those specifically out there.
Is the concentration of the mining companies or mining procedures, is that going against the idea of blockchain being more egalitarian and spread out, causing conflicts?
Sure, it's causing conflict, but at the same time, that's the reason why we have forks, right? So once the miners are entirely in control, what you'll see is another fork. That's the last time there was a direct result of that. That's why we have Bitcoin Cash.
Right, but if there's too many if there's too much of a concentration of miners, doesn't that actually become like how the banking system is now? And it's
Yeah, absolutely. But the point there being as well, if I don't want to support you, the miner, anymore, then I just stop using that particular currency. So the currency will suffer, and by extent, the miners will suffer because there's no volume in there. That's part of the gamification, which is always underestimated in the blockchain world. Because people think, well, you can have whatever, 51% attacks, and I can rule the network, but it's fluid, and they will shoot themselves in the foot, right? So yeah, you destroy the market, guess what? You're part of the market, you destroy too. This gentleman there. Can you pass this on? I'm tired of walking.
All right, so how do you think that CME and future contracts is affecting the Bitcoin market or cryptocurrency market? Because we saw that last team, again, one of the contracts were expired caused delay, right? And then one more contract is expiring this week. We are seeing already, deep in the Bitcoin and cryptocurrency. So what do you think about it?
Yeah. So the gentleman was asking about the Chicago Mercantile Exchange, CME, which is the largest mercantile exchange on the planet, and they started listing Bitcoin futures a couple of weeks ago. Other mercantile exchanges were listing them before, and yeah, it introduced some volatility in the sense that people that weren't invested emotionally into the market got into the market, and they respond to certain news way more fragile than a professional trader ever will, right? So they respond to news from China banning Bitcoin, they respond to news from Korea doing something in Bitcoin. Specifically about China, if there's any Chinese in the room, they probably know this. In China bans iPhones, right? And every Chinese official owns an iPhone. Right? So certain languages that's being put out there is put out of context. And so what you're referring to is, yeah, now people that don't have to go through the effort and creating a wallet and buying Ethereum and then buying something else with it can just invest into this very simple instrument, but they actually don't know anything about it. So every time there's another news item, they react to it. And that's introduced new volatility, which is okay, because that will always happen in the beginning. So the professional investors, quote unquote, will stay in the market, will keep trotting along, and it will, at the end of the day, work out for those two. But yeah, those are initial fluctuations that you'll see every time they introduce another future, right? It's not limited to Bitcoin. It will happen with Ethereum again. Someone needs to go to bed. Okay. Pick the lady in the back. She didn't have her turn yet.
Yeah, this is all still a mystery to me. Do you have a book you can recommend that I can read to learn what this is all about?
So the lady's asking about a book. Actually, I do a separate talk, just introduction to blockchain, that's on YouTube. That might be a little helpful. The thing about this is there's a lot of great talks, but this topic honestly is changing a ton, like week by week, I learn something new every single day. So find something that's fairly recent, or find something that's very fundamental, like I think his first name is Scott, right? Wrote first about it. I'm referencing him on my blog. He does a great talk about that, about all the fundamentals, and I'll do an okay job, I think, to explaining just the fundamentals of blockchain itself and the vocabulary, because some of this honestly is just vocabulary that has been introduced, because we're using all these old terms in a different context right now. Like, again, it comes back to referring to something as a currency when it's really a digital asset and has all these other properties, but because of limitations of language, you keep using that particular term for it. So that doesn't help you to understand it. So you really need to go back and understand the basic terminology in the space to then be able to make an informed decision on articles. And again, it comes back to the mainstream media doesn't spend that time educating themselves. They use it synonymous. They use blockchain and cryptocurrency like something that's stale, that's not evolving. They treat it tomorrow the same that they have been treating it yesterday. It's something that's a fad, something that goes away. And to me and most other people in the space. That's like the people that said the internet will never catch on, right? So it's awesome.
Do you have a slide with your YouTube channel, all sorts of ways you can find you?
Not quite that famous yet, but if you Google my last name, you'll find it. Yeah.
Yeah, can you spell it?
Oh wow. Kameir.
And yes, you can subscribe to him, so.
You can? Wow.
Can you repeat it?
Yeah, I'll be internet famous. Kilo Alpha Mike Echo India Romeo. You got it right. Very good. Military school. I thought I was done. Okay.
What's the problem with the projects that don't have their own blockchain or their own Ethereum or something else?
Say it again.
What's wrong with projects that?
Oh, what's wrong with projects on Ethereum? So specifically early on, I mean, I went to a lot of Bitcoin events and a lot of ICO pitches, and a lot of those were based on the misunderstanding. Honestly, the people thought transactions don't cost anything. They just happen. I can just distribute all this data across all these different layers, and it costs nothing. And they never figured out any of the economics. And you could see this 3 sentences in. You could see that they didn't understand it. You're proposing to build this on the Ethereum blockchain. Well, let's say it has to do with a point of sale system, right? Are you going to wait for your transactions to go through at a cashier for 5 minutes? You won't, right? So this can easily happen. Or the alternative is you're going to pay a $1 transaction fee for your $2 coffee. So that's also not going to happen, right? So you're going to understand these basic fundamentals. If someone is proposing to do something on a certain blockchain, you got to understand, okay, transaction A take time, transactions cost money. That particular blockchain, how fast it is, how many transactions can it support, what does it cost to run on that, how distributed is it, and a whole lot of other elements. And on Ethereum right now, this comes back to, it's been mostly used for creating new tokens, because there's a token standard, ERC20 token standard, which makes it very easy for you and me to just copy the code, change the variables, create my own token, give it a name, and push it out there.
So if the amount of the transaction is a large amount, it's not just a couple of dollars, that's not a problem?
Again, you set the parameters yourself in your smart contract. So if you have a more sophisticated wallet, you set the transaction time and the fee you're willing to pay. You can set the fee to 0, no problem. I do that all the time. It will take forever to go through. It will eventually probably go through. Right? If it's not important for you to have those, whatever, 1,000 Ether here versus there, you'll set the transaction cost to next to nothing. It's up to you and up to the capabilities of the instrument that you're using. Check out your wallet. So that's the problem with a lot of those retail wallets. They just set it for you. And then all of a sudden you figure out that, hey, your $100 transaction costs you $19 in transaction fee.
But then if you have your own blockchain, you are not on Ethereum, the transaction still costs money.
If you have your own blockchain, yeah, then you have a private blockchain, right? So that would be my point of saying, hey, do you really have a blockchain if it's your private blockchain, right? What do you really have? A VPN, a distributed database? Yeah, I mean, it's fine. It's just not really open source. It's not truly distributed. It's not truly decentralized because, hey, you're the only one maintaining it. If you run out of money, no one's maintaining it anymore. It stops working, right? Right now, if one mining facility burns down, it doesn't affect the network of Bitcoin. It doesn't affect the network of Ether. Life just goes on, right? That's why it's decentralized and distributed. That's the purpose of it, resiliency. And so that's why this particular aspect is not true for private blockchains. I guess we can do this all night.
Okay, a quick question about investing in ICOs here in the U.S. I saw some articles, and we can't technically invest unless you're an accredited investor. I saw some articles, and they were saying basically if you use a VPN, it is possible to invest in those countries that can. I don't know, as a lawyer, what is your opinion on that? Could come back to bite someone who did it. Not that I'm thinking of doing it.
Well, so technically I haven't been a lawyer since February 27th, 2000, but anyhow, so practically what you'll see most, I think all ICOs that I've been involved in that I know of do is they do the KYC AML, know your client, and anti-money laundering checks in the background. So even if you pretend to not be in the US, they know exactly where you are. I have your eye color and your hair color in my data, not in my database. It would be differently organized, but yeah. So right now, everybody that's out there that's pushing out a new token, if they have any form of legal advice, they will try to exclude you as a non-quote-unquote accredited investor from their token generation event, unfortunately. But really, it comes back to who is being protected, right? I mean, you're the consumer. You can just walk into any casino in Las Vegas and put any amount of money on there, right? So it seems like a double standard that you can't do the same thing in an area where we actually have reasonable expectation of some return or other people also participating in this project where you can learn about it, right? So it seems okay, but my personal opinion.
But you're talking about, you're expecting people to do their homework and figure out what they're doing versus, anybody can set up a quote-unquote ICO for the most part, and then basically walk away.
I think that happened a few times in the beginning, not so much anymore. So really right now the hurdle is pretty high in terms of what you have to put up in terms of money. So either you have that money or you raise that money. If you raise that money in fiat currency to do your TGE, whatever you want to call it, then you're probably looking at $500,000 that you need to come up with. So there is someone doing the due diligence for you in that sense, right? So there's lawyers involved that do the due diligence on the legal part, there's accountants involved, and there's other investors involved that looked at the project, looked at the technology, hopefully, to get them to that point, right? Which is the case for every single public company as well. But we pretty much reached this point at this moment in time, because if you have to go out there, I mean, you know this about your website, right? You're creating a website and initially you thought, well, people will just show up. Oh, well, hell no, you got to buy that traffic, right? So that's the same thing for your ICO. You got to buy that traffic. You got to pay people to market it. It's not cheap. A banner in this space on a good site is like $15,000 for a week. So.
That price for us was $800,000, but we now have a deployable technology.
Yeah, 500,000 was on the low end, yeah. For sure. All right, all questions answered. Very good. Well, thanks everybody.